Hello again, everyone. In this technical analysis of the stock market video, we're going to focus on the Nasdaq Composite Index this weekend. The composite and the NDX, the Nasdaq 100, are almost identical in terms of the way they're trading and the pattern formation on the charts. So I've got the charts built for the composite. That's what I'm going to go with today. And we're going to look at my preferred count and my alternate count on the Nasdaq. And then I titled the video Bearish Divergence because that's what I'm seeing with a pretty key indicator. So we'll talk about that and look at that. And then I want to check in on oil and gold. Gold may be getting close to a bottom. All right, let's take a look here, at least a short-term bottom on gold. Let's put it that way. Let's take a look at the Nasdaq Composite. What we've got is this is my preferred Elliott Wave count, and this is a running flat in here. And by running flat, I mean we had the high in January with 3 waves down, 3 waves up, and a 5-wave move back down. And C did not quite go to the end of A. So therefore, this is a running flat. And now what do we have coming out of this? We've got an impulse move to the upside, okay? But we are very close to having 5 waves completed on the impulse move. 1, 2, 3, 4, 5. We are in the 5th minor wave of this 5th intermediate wave. And I believe that this is getting very, very close to the end. We hardly had anything happen on Friday. It was up 2 points. Little doji candle in here for Friday. The market really didn't do a whole lot, even though the Dow was up 94 points on Friday. There was actually more stocks down than up on the New York Stock Exchange. All right, so that is my primary. I think we're getting close to top here. Let me pull up the net 52-week high-low on the Nasdaq. And this will be the bearish divergence that I'm talking about. You can see here that this is the Nasdaq high-lows. This is a net where every day that you basically net out how many stocks hit the 52-week high minus how many hit the 52-week low. And you can see that back in January, we didn't confirm the peak. And then it did not confirm the move in March, okay? The move to highs here in March. Okay, that was not confirmed by the 52-week high, and we got a pretty good sell-off. And then now what we're doing is we've pushed to new highs in here when is this? Mid-June, and now here in July, and we're literally going in the opposite direction from a high on June 6th. So if we come back and look at that, so where's June 6th? Well, June 6th is right here. Okay, so that's where we had a high on the 52-week indicator, and basically it's done this as it came down while this the Nasdaq has kept pushing to little new highs. Now we actually did close on a new all-time high in here on Friday. So, but again, I think that we're getting a little bit long in the tooth, and we're seeing this 5-wave move. And when you start to see a couple of things come together, like the wave count, non-confirmation or bearish divergence on one of the key indicators. Granted, it is only one indicator, and the bulls will say, yeah, it's only one indicator. So then the bulls can look and say, well, here's the alternate count. And let me pull this in here. The alternate count is that we actually are doing a triangle that ended here in, what is that, April 25th for the 4th wave here instead of being over here at a flat. Well, what's the difference? The difference is, by the way this has moved up out of this, this is just wave 1 to this high, and then we have wave 2, which implies that we have wave 3, 4, and 5 to go. Now, this is not meant to be in any kind of depicting or predicting where they're going to end. I'm just showing the pattern as to where it goes. 3, then a pullback, 4, probably sideways, and then a 5th move. Okay, and I say sideways because we've already had a sharp pullback on wave 2. So anyway, this is the alternate count, and I just like the looks of, the feel of the primary count that I've got. The preferred count's my orange count. I use orange and blue because those are the colors of my alma mater, University of Illinois Fighting Illini. All right, so this is the picture. The other thing is that the way this is adding up in here, the S&P 500 is getting to the point where it looks like it's at the end of its rally mode too, with an ending diagonal pattern, and it kind of puts it in sync, both of these in sync in terms of where they're at now. All right, the next thing, so we talked about that. Let's take a look at oil, and I'm going to bop back to this is new software that I'm migrating to. This is Motive Wave. I love the way it uses Elliott Wave in here. And back here on my old software, I'm going to go back to the USO. And I believe that oil is putting in an ending diagonal pattern here. It's an expanding diagonal pattern. You know, we called this here at the high, and I talked with my members about this. Back when I saw this pattern, I saw this kind of developing in here. So far, it's played out pretty well, and we'll watch and see, is this truly the high in here? And this looks like basically a big counter trend zigzag type of move that's occurred with an A, B, C. And yes, a C move should have, if it's truly a zigzag, should have a 5-wave sequence. And I believe that's what we got. All right, now let's talk about gold. And I'm going to come back and look at gold over here in Motive Wave. This is a weekly chart of gold. Let me get rid of the crosshairs. Where's that button? There we go. And so right now, we have this A, B. A was a big 5-wave move down, okay, from the, I think it was 2011 high. And so now we're looking for, I really thought that B might be over here as an alternate up above this move here. But this is the better picture right now. I was looking for a zigzag initially. I was looking for a zigzag initially of a move like this and a move like this, and then coming up to a zigzag that would have punched higher above this. But we really haven't gotten that. We've gotten a lot of overlapping, very choppy waves. Again, this is a weekly chart. You can see that right there. And this is my preferred count on gold. And so what I think is really playing out here is this triangular pattern. Let me come back to my mouse and let me go to, let me get rid of this. Hopefully I can do that. There we go. I'm still trying to figure out the buttons on this thing. So now when I look at inside the triangle, A, B, C, D, E, the implications are that D is just a little bit further down in here. My target is 114. Well, how do I get to 114? Well, that just so happens to be 61.8% of B. Okay, so that's a target. So watching to see how the waves look on a daily basis as it pushes on down here, then what's the expectation after that? That we get down in this neighborhood and we have one more bounce, but not to new highs, and then that's all she wrote. Okay, then I'm expecting another major move down like what happened over here in this big 5-wave sequence from 2011 to 2016. So that's the picture right now on gold. GLD, we're targeting down here around 114. We'll see how she plays out, watching the daily wave structure over the next week or so. All right, that's it for today. If you felt like the video was helpful, please hit the like button if I don't lose my voice here. And if you're not a subscriber to the channel, hit the subscribe button. And if you could think of one person who would benefit from the video, share the video with them. If you'd like to get more inside education trade ideas, become an insider member. Just click on my little face on the screen there and it'll take you over to the website and check out the membership. All right, everyone, have a wonderful weekend. Stay cool. We'll talk to you on the next video.